Kwon, CEO of Terraform Labs, rejected claims that South Korean authorities had frozen another $39.6 million in his crypto holdings. Why would authorities need to freeze his funds? How is crypto being used as a tool for money laundering? What is the most promising currency entering the market? Let's find out more about the problems facing the cryptocurrency world these days. First off, Terra's Kwon denies any frozen funds. He doesn't even use KuCoin or OKEx, doesn't have time to trade, and most importantly, no funds have been frozen, he claims. He has no clue whose funds have been frozen, but he wishes them well and hopes they utilize them for good. His mention of OKX and KuCoin came in response to a report from last month that the businesses had worked with authorities to freeze 3,313 Bitcoin, which was valued at around $66 million at the time. However, Kwon and the Luna Foundation Guard, a charity established to maintain the Terra environment, have both refuted such stories. Kwon previously stated on Twitter that he had not stolen any company funds and that no funds from Terraform Labs or Luna Foundation Guard had been frozen. Interpol, the International Criminal Police Organization, had issued a red notice for his arrest at the time. The volume of disinformation propagated has perhaps been the most startling aspect of all of this. According to South Korean prosecutors, the notification means that law enforcement authorities are now compelled to help in locating and apprehending Kwon. For at least a month, he has been denying that he is on the run while also refusing to divulge his identity via his Twitter account, stating that he and his organization are fully cooperating and have nothing to hide. On September 15th, a South Korean judge granted an arrest order for Terra's founder, accusing him of breaking capital market laws. The warrant also seeks the arrest of 5 other Singaporeans in connection with the May crash of Terraform Labs' algorithmic stablecoin, Terra USD, which resulted in the loss of $40 billion. Next up, crypto's $4 billion money laundering problem. Since 2020, criminals have laundered at least $4 billion in illicit crypto earnings via cross-chain technology, according to new findings from blockchain analysis firm Elliptic. Criminal gangs have abused and used cross-chain technology that facilitates transactions across multiple blockchains as laundromats. In recent years, blockchains have grown increasingly linked, and emerging technologies such as decentralized exchanges, DEXs, cross-chain bridges, and coin swap services allow capital to move effortlessly across thousands of different crypto assets. However, the simplicity of transactions has created new chances for criminal groups by obscuring the trail of transfers, making the source and destination of the money difficult to track. Hackers, ransomware organizations, dark web marketers, online gambling sites, illegal virtual service providers, and Ponzi schemes have used these technologies to conceal the origins of billions of dollars in criminal earnings. The Financial Action Task Force, FATF, first mentioned money laundering via cross-chain transactions, nicknamed chain hopping, in a June 2022 study on virtual asset risks. According to research issued recently, $1.2 billion in stolen cryptocurrency via decentralized finance or exchange scams was traded using DEXs, which enable direct transactions between cryptocurrency dealers. Uniswap is one of the largest DEXs currently in operation. Another $1.2 billion in illicit assets was laundered using coin swap services, which let users trade assets without even having an account. Such services are advertised on Russian cybercrime forums as they nearly always cater to criminals. Elliptic claims its results point to a new cross-chain problem, as well as a rising fear that laundered funds may be used to finance sanctioned or terrorist organizations. The issue was most recently brought to light in August of this year when the United States Treasury Department infamously sanctioned cryptocurrency mixer Tornado Cash, which officials claimed had laundered more than $7 billion since its inception 3 years ago. According to the Treasury, the Lazarus Organization, a Democratic People's Republic of Korea (DPRK) state-sponsored group of hackers sanctioned by the U.S. in 2019, stole around $500 million of the laundered amount in the greatest crypto theft to date. Previously, in May of this year, the U.S. Treasury blacklisted another crypto mixer, Blender, which was also used by North Korea to launder stolen digital currencies. The Treasury Department's notice sanctioning the laundromat Blender expresses concern that North Korea may use the profits of cyber heists to generate revenue for its illicit weapons of mass destruction (WMD) and ballistic missile programs. According to Elliptic, the cross-chain bridge Renbridge laundered $540 million in hacking gains in August of this year, contributing to the $4 billion theft. These bridges connect several blockchain networks and allow users to move cryptocurrency coins from one blockchain to another. Don't go anywhere. We're going to discuss the expected boom of the RBIS token. Moving on, RBIS is about to jump 7,000% more than Bitcoin and Shiba Inu. Prices for all sorts of currencies have have declined in recent months, from known brands to up-and-comers, and the crypto bear trend is certain to persist through the autumn and winter. Nonetheless, certain currencies are gaining traction and providing lucrative chances to smart investors. RBIS, the native token powering Arbismart, a wallet and financial services center, is a significant breakout star of the bear market, with experts expecting a 7,000% increase by the end of 2022. One of the most popular utilities in Arbismart's EU-approved ecosystem, especially during times of extreme volatility, is its automatic crypto arbitrage mechanism, which provides an excellent buffer against dropping prices. Crypto arbitrage produces a consistent source of cash from brief price changes across exchanges, which occur with equal frequency in both bull and bear markets. Arbismart's technology, which is integrated with roughly 40 exchanges, searches for price disparities day and night. It buys the cryptocurrency at the lowest possible price and sells it at the highest, resulting in annual earnings of up to 45% depending on the amount invested. Another bear-resistant Arbismart tool is the recently announced interest-generating wallet, which provides the same return on your cash regardless of market direction. Wallet holders may lock funds in short-term saving plans for as little as a month or in long-term plans for up to 5 years, earning a higher rate the longer the funds are locked in. Interest is paid out on a daily basis and can be withdrawn at any time or added straight to the lock sum for a greater rate. Arbismart savings products provide rates that are unmatched in the market, reaching up to 147% each year. The actual amount of interest received will be decided by the wallet holder's account level, which is based on the number of RBIS they own. More RBIS implies a better return on balances in all 25 supported fiat and cryptocurrencies, ranging from Bitcoin, Ethereum, and ApeCoin to Euro, USD, and GBP. If the balance is in RBIS, the interest rate will be 3 times higher than the rate given for accounts in any other currency. A wallet holder, on the other hand, can choose to maintain their balance in Bitcoin or Euro and enhance their earnings by receiving daily interest in RBIS. Also, Arbismart's upcoming services. Arbismart's development team will be extremely active this autumn and winter. Arbismart is providing a DeFi protocol and yield farming service, as well as a mobile app for trading, purchasing, storing, and selling cryptocurrency with a completely unique twist thanks to the incorporation of innovative gamification components. In addition, an NFT marketplace for buying and selling non-fungible tokens, as well as a collection of one-of-a-kind Arbismart NFTs, will be released in the fourth quarter. Arbismart will establish a cryptocurrency market, as well as a gaming metaverse that will offer real-world rewards for the purchase, sale, and development of digital real estate almost simultaneously. All utilities in the Arbismart environment are linked, allowing for better terms while utilizing multiple services at the same time. As an example, owning an Arbismart NFT will increase a liquidity provider's APY. Finally, the tokenomics of the ecosystem. So, how will the present and forthcoming Arbismart ecosystem services affect the RBIS price? To address this, we need to go further into the token economy. To begin with, it is vital to realize that all of Arbismart's utilities need the use of the RBIS token. For example, before the crypto arbitrage mechanism can begin making money on a user's behalf, the funds deposited are instantly transformed into RBIS. The token will also be necessary to purchase all in-game products in the metaverse, as well as to participate in the decentralized yield farming scheme. Furthermore, RBIS is required to obtain interest on savings accounts, and the more RBIS acquired, the better the payout for all the authorized currencies. As a result, token demand will climb with each additional utility introduced to the Arbismart ecosystem in the next months and years. Meanwhile, as the new wallet gets popular and an increasing number of RBIS are locked in long-term savings and removed from public circulation, the supply will decrease. This is because the total amount of tokens that may ever be created has been permanently limited. As demand exceeds supply, the token price will explode, creating massive financial gains for RBIS owners on top of their revenues from staking, gambling, trading, or simply securely holding their wealth. That's a wrap for this video. Do let us know if you think that RBIS is the next big token in the cryptocurrency market. Don't forget to hit a thumbs up and subscribe to our channel. Bye!